So we just had the earnings for Tesla stock as well as the earnings call, and let me be honest guys, it was a bit disappointing. Looking at the fundamentals, we see that Tesla Q3 revenue standing at 23.4 billion, falling slightly short of the estimates from Wall Street, which was 24.6 billion, which makes it a miss. Of course, looking at the adjusted earnings per share, Tesla came in at 66 cents, again below the expectations of 74 cents, making that a miss. And then free cash flow for Tesla is at 848 million, missing the projected 2.59 billion, making that a miss as well. And then the gross margins came in at 17.9%, which was just slightly under the forecasted 18%, but still a miss. But as I often say on the channel, there's a lot of nuance in regards to these earnings, and it's not just about looking at the numbers, it's also about listening to the forward guidance. And so definitely a lot of disappointment there as well. Now, we did get to hear about the Cybertruck delivery event beginning in November 2023, but we did hear a lot of pessimism around the Cybertruck from Elon Musk. In fact, he started off the earnings call by just saying, hey, we need to kind of pull down the excitement for Cybertruck, saying that it's going to be enormously challenging to reach volume production and also positive cash flow for the Cybertruck, as it's a very unique product. And this is why we haven't seen a big difference in cars for the last 100 years, because it's very difficult to actually be profitable and scale a new design. And so this was honestly pretty concerning. And fellow YouTuber Sasha Jansen made a tweet that pretty much hit it on the nail by showing how in 2019 it was a completely different narrative, by Tesla saying that the Tesla Cybertruck will be super easy to manufacture because we have redesigned it from first principles and will be super high volume at super low cost. While now on this earnings call, we heard Elon saying, well, actually, manufacturing the Cybertruck is going to be super hard, the ramp will be super slow, and will be hard to make profitable, and will probably cap at $250,000 a year. And Elon Musk goes on to say that prototypes are easy and production is hard, which is something that we knew. We always knew this, but we always have heard this idea that the Cybertrucks was going to be something that they had actually nailed down. So actually hearing this come out of the mouth from Elon Musk is completely disappointing for a lot of long-term bulls on Tesla. Now, in previous videos, I mentioned how we wanted to hear an update about the Optimus robots, as we've heard a lot of optimism from Elon Musk and Tesla in the past on how these robots are going to contribute to a huge amount of success for Tesla. In fact, even in the beginning of this earnings call, we heard Elon Musk mention that these robots are going to be one of the main factors why Tesla will become one of the most valuable companies in the world. And so this isn't the first time we've heard Elon make these claims. However, what was again disappointing from this earnings call is that when we had an analyst asked Elon Musk about any updates about the humanoid Optimus robots and will they start working on a production line next year, he actually responded saying that he wants to decline to really speak about that. And then he also mentioned that as far as the progress, a couple of years ago they couldn't even walk, now they can do yoga, and maybe in a few years they can do ballet. Now, this was honestly something that was a bit disappointing, because a lot of Tesla bulls aren't really excited about hearing that the robot may be able to do ballet in like a few years. That's not what we want to hear. And so this was very disappointing. Now, I'm glad that Elon Musk had said a lot of truth in this obviously earnings call. We don't want him to just blatantly lie to us. But again, a lot of it was just very disappointing, which is why we saw Tesla stock pretty much fall down like a rock during this earnings call. But with that said, I want us to go ahead and hop into my laptop. This way we could go ahead and also take a look at Tesla stock from a technical perspective as well. Alrighty, so we are in my laptop and we see that Tesla fell in the after hours during the earnings call approximately about 5%, which is pretty close, or very close to what I've told the Push Your Profit private group. So for a reference, here's a snippet of what I said. At 4:04 p.m., of course I shared the numbers for the earnings, but I said I expect Tesla to do 5% down, and then I also said that historically Tesla moves 7%, meaning that historically for earnings, after the earnings call, we see Tesla move up 7% or move down 7%. But I specifically said I expect Tesla to do 5% down. Now, how did I come up with that number? Well, if you guys saw yesterday's video, I actually showed you guys a easy calculation that you could always do to kind of get a guesstimate of how much your stock will move after its earnings call. Right now, of course, it's just a guesstimate, and there's several ways to kind of come up with this guesstimate. You could look at historical movement. For example, 7% was the historical movement, but there's fundamentals, there's technicals, but I showed you guys with option pricing, and it's fairly easy. I'm going to go ahead and quickly show you guys again, but if you guys saw yesterday's video and you saw that, then you could kind of just fast forward this part. But let's go ahead and show you guys how you could always come up with that number. So first off, you're going to want to pull up a calculator. If you're using the Windows calculator, make sure that you set it to scientific so that you could have some additional functions. And the first thing you want to do is just really 1 divided by 365, because we're just looking at a 1-day time frame. And then of course you get this number over here, and then you're just going to square root it. And that's probably the hardest part about coming up with this calculation, just remembering that part. Then you just multiply it by 2 other numbers. So the first number is going to be the price at where the stock closed at. So we see Tesla closed at around, looks like $242.70. So we're going to do multiply $242.70, and then lastly you're going to want to multiply this number by just the implied volatility. So you're going to go to the options chain, and then what you're going to do is look at the nearest expiration, and you're going to look at the implied volatility at the money. You're going to want to look at that one, and it shows 105.25%. So what you're going to do is just multiply this times 1.25. It's actually 1.0525, right? And then you're going to hit equal. And so approximately options, they're pricing Tesla to move $13 after its earnings. And so what we see is if we actually kind of move this calculator over here, so if 242 was the price it closed at, minus $13 kind of puts us around this $230 area, which approximately, if we just move that, it's about 5%, right? Give or take. Again, this is just an estimate, and there's several nuances in regards to looking at this, right? Because again, the earnings call, maybe Elon Musk could have said something completely different, and it could have pushed Tesla stock upwards. But in this case, I said 5% down because there was somewhat of an expectation that the fundamentals weren't going to look good. We kind of got like a precursor to that in the last earnings call. So you combine that with then just looking at this quick calculation, you could kind of guesstimate that, okay, Tesla's most likely going to fall 5% down. And if you're someone who likes trading the shares in the after hours after earnings, you could have, made a nice trade shorting this. Of course, I didn't actually trade it myself. I was just pretty much more interested in actually hearing the earnings call, as I also do trade Tesla stock in the short term. Like I'm someone that, I could have traded this short term trade over here, but I'm also a long term bull on Tesla. I do have exposure to Tesla in my long term portfolio, so I was kind of more interested about what's going to happen for Tesla in the long term rather than doing a quick 5% trade. There's always opportunities, so for me, 5% just didn't, interest me, right? Now, if we take a look at Tesla stock before the earnings report, we see that Tesla stock actually sold off quite a bit before the earnings. Of course, we know Tesla sold off a lot over here, but it definitely had a lot of selling pressure earlier in the day, and I actually believe that this has nothing to do with the earnings report, and that it has something to do with something completely different. In fact, if you take a look at the S&P 500 index ETF, you see that the overall markets fell down as well, and the overall markets didn't fall down just because of Tesla. In fact, if you look at the QQQs, which is the NASDAQ index ETF, again, you see the overall markets falling down. Nothing to do with Tesla. So why did we see Tesla as well as the overall market sell off even before the earnings announcement from Tesla? Well, if we take a look at the treasury markets, we see something concerning over here, where we see the 10-year treasury actually hit a level that it has not seen in 16 years. It made a new high, and as I often share on this channel, when you have treasuries going upwards, that's bad for stocks. That's a risk premium equity, a risk equity premium situation, where when you have equities or the 10-year treasury hit 4.95%, basically 5%, it takes away for the appetite to invest in stocks. So you see a lot of capital kind of flowing into this guaranteed 4.95% and a lot of selling in the markets. And so that's definitely something that was concerning. But if you actually take a look, we also had some other data come out today. For example, At 2 p.m., we had the Fed Beige Book come out, which isn't really talked about very often, but it's definitely something you want to pay attention to. This is where basically all the Federal Reserve districts, they release some information and then collectively write a summary of what they see going on in the economy. And this is something you want to pay attention to. So if you actually go to federalreserve.gov, you go to monetary policy, look at their Beige Book, and then you look at the most recent one, which is going to be October 18th. And it's going to load up in just one moment. You see, this is the Beige Book. And what we actually saw in the Beige Book, right? I'm not going to go ahead and read through all that, but because there's definitely pages and pages that you could go ahead and read. But what we saw is that the economy, or that the central banks are actually expecting more weakening with a lot of jobs, and that's also something that's concerning, because one of the main reasons why we're not technically in a recession is because jobs are holding up. But the Federal Reserve is kind of saying, hey, we actually expect jobs to actually, contract just slightly a bit. In fact, today alone, we saw a lot of companies do some minor layoffs. We saw Google, as well as some actual hospitals lay off healthcare workers, and just various industries had a lot of layoffs. And it's projected by the Federal Reserve that we're going to see more layoffs, which makes it a little bit more tougher for the overall economy. But now, looking at Tesla from a daily time frame, right? So we are in a very dangerous area, because we just had this bad earnings. Fundamentally, the earnings call wasn't that great either. And so what we see is that we have an area right over here where there's a lot of volume relative to price, and below that there's an area where there's very little volume relative to price. Now, volume relative to price is completely different from your traditional volume relative to time. And basically, when there's a volume kind of gap over here where there's little volume relative to price, if we see a stock fall down and there's selling pressure over here, it could just expedite, or just like I'm trying to look for a better word, but pretty much just emphasize that price action. And so what we saw in the past was, when there's buying pressure around over here where there's little volume relative to price, the stock pushes upwards. It pushes the order books upwards. But if we go to an area where then selling pressure takes place, it could really fall downwards, and we don't see this bigger spike in volume relative to price until we hit this kind of like $200 area. And so that's something that we're going to want to pay attention to. Now, I'm not saying that Tesla is going to absolutely fall down. At the end of the day, I don't have a crystal ball. I'm not a Nostradamus, or if that's how you pronounce it, right? But I'm just looking at the price action, looking at the fundamentals, and looking at everything else taking place. And right now, it's just not a good area for Tesla. And this is actually something I've been telling the Push and Profit private group, not just Tesla and Silo, but going into the last quarter is going to be very difficult. And especially as we go into 2024, there's going to be much more pain in the economy, which is why I've been telling the Push and Profit private group that, hey, we're going to see much more pain. And I don't expect things to get better until the second half of 2024, where we start to see interest rates get cut, because as we know, interest rates have a huge influence on consumer behavior. I mean, Elon Musk even mentioned it in this earnings call today, that it's very tough for people to buy Tesla when, even with good credit scores, you're financing at like 9%. It's ridiculous. I mean, right now, thank God, knock on wood, I don't need to purchase a new vehicle. But if I did, that'd be terrible. I mean, I have what's considered an excellent credit score, and even with my score, I'd be financing at ridiculous prices. We see home sales. If anyone has been paying attention to the real estate market, I'm not going to go too deep into real estate, although I am licensed in my state as well, but real estate sales have been very slow. They've been I mean, you guys don't even have to have me tell you guys. You guys know that interest rates influence behavior. Elon Musk acknowledged that, and that's something that we want to be aware of. And so that's why I believe the second half of 2024 is going to be a better part of the year. But right now, we're going into a storm, and we're going to want to pay attention to what's going on with jobs and everything else going on with the overall economy. And I know when I talk about Tesla kind of coming down, I get a lot of hate, and I know it's unfortunate, right? For example, last time Tesla had earnings, it was getting rejected by this trend line. We also had bad forward guidance, and I talked about Tesla falling down all the way to this area right over here, 215, as it was somewhat of a support in the past. And let me tell you, when I was talking about Tesla stock falling down all the way over here, I was seen as a villain, almost as like this evil like Tesla bear, you know, and it's very weird because I'm bullish on Tesla. I just have to let you guys know that Tesla doesn't always go up, right? There's going to be times where things go bad, and so that's where we're currently at. We saw, you know, Tesla kind of push up. I know when I talked about buying Tesla over here, I was seen as this Tesla hero, right? With Tesla's going up, everything's good. And as we're back into this area over here, I'm most likely gonna be, you know, I'm gonna come across as the evil Tesla bandit or the evil Tesla bear, you know. It's fine, you know, it is what it is. It's the internet. You know, if anyone has been an OG follower of the channel or someone who's been in the Push and Profit private group, you guys know long-term bullish on Tesla. Right now, just things are not that attractive, and we'll wait and see. You know, of course, if Tesla falls down, the first area I'm going to want to see is right around here, just like last time. Do we hold above it or do we fall down? And of course, we're just going to be monitoring the levels. Technical analysis isn't so you predict the markets. It's just to monitor where things are at or measure things. And so if we fall down to like this like low 200s, I'll see, do we bounce up or do we fall even lower? And we see that there's a gap right over here. And a lot of Tesla investors are actually salivating for Tesla to come down because they know that, yeah, you know, it's going to take 18 months for the Cybertruck, like Elon Musk said, to actually be cash flow positive. But long term, you know, the Tesla bulls they're bullish, right? They're, you know, the trend for EVs are looking good. And so a lot of Tesla bulls are actually salivating for Tesla to fall down to these low levels just so they could scoop up more shares. And I'm not going to lie, I'm going to be part of that pack as well. And so, we'll definitely have to see, but I'm going to end this video over here. I don't want to make it any much more longer. With that said, hopefully you guys got some value. Subscribe to the channel, and before you guys go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.